week. I'm Jasmine Klein. I'm an associate client advisor at Marsh, and I have the pleasure of introducing our next session. So this session will actually be a recorded session due to some scheduling conflicts, but it was co-moderated by myself and Ward Ching, who works at Aon and is an adjunct professor at USC, and you likely saw him at the earlier sessions today. But our wonderful guest speaker is Eugenio Gonzalez from Plug and Play. The topic is insurtechs, innovation, and new uses of technology in the insurance space. I learned a lot during the session with Eugenio and know you all are going to really enjoy it. The recorded session lasts for about 45 minutes, but if there are any questions, feel free to put them in the chat and I'll definitely pass them along to Eugenio or any good feedback as well. I'm sure he'd love to hear that. And with that, I'll turn it over to the recording.
Good afternoon, everybody. Welcome back to the afternoon session associated with InsurTech. I am Ward Cheng. I am a professor at USC, and I'm also a managing director at Aon.
And I'm Jasmine Klein. I'm an associate client advisor at Marsh and also a former student of Professor Cheng.
And with us today, we have Eugenio Gonzalez. I think you're going to find this conversation to be absolutely fascinating. We're going to bring some issues to the table that you probably have not seen before. Eugenio is a partner at Plug and Play Ventures, where he focuses on the areas of insurtech, fintech, cybersecurity, and enterprise software. Having worked in regulated financial services for over 10 years, Eugenio joined Plug and Play from Carey, the largest law firm in Chile, where he led investments, M&A transactions across financial services in several countries. He was centrally involved in the acquisition of a US-based bank and established major technology-focused strategy partnerships there. At Plug and Play, the world's largest corporate innovation platform, Eugenio leads the InsurTech investment practice and oversees relationships with several US and international insurance carriers, brokers, and reinsurers. Eugenio holds a JD from the Universidad de Chile, as well as an MBA from MIT Sloan. Welcome to the roundtable, Eugenio. It is wonderful to have you here. Jasmine and I have been thinking about and talking about this presentation for quite some time. You're bringing a fundamentally new kind of perspective to the CPCU team, probably areas they haven't seen before. So first, let's talk a little bit about Plug and Play. Who is Plug and Play? What do they do? How are they leading the edge in the insurtech innovation space?
Yeah, thank you, Warren, and really appreciate you guys having me here. It's very exciting. Plug and Play is really at the nexus of everything that's happening within innovation. We have more than 550 corporate partners. Think of companies like Panasonic, Nintendo, PepsiCo, or Progressive. And these folks come to us because they want an edge over their competition. That's what we call these days innovation, right? And so to stay ahead of the trends and to basically understand what's coming around the corner, they leverage us where we can aggregate all the different data points that we're collecting out of our ecosystem and help them define their innovation strategies. So we're very fortunate to be in this position where we can understand what's coming, what's going to impact the insurance industry, and how we can better prepare some of our partners to face all these challenges and take real advantage of these opportunities as well.
What was really fun was that I spent some time at Plug and Play in the Silicon Valley office, and it's really just a series of offices where you sit down and work with the innovators and the entrepreneurs as they're thinking through their business plan, as they're thinking through their value propositions, and they're getting advice from a whole bunch of people around, does this technology work? Is the application appropriate? Is their price point in line with what the markets are talking about? So you're really creating a market environment where there's a lot of innovation happening in one spot where people can talk to each other, and you can get really good advice from those who are potentially buyers of these companies or buyers of the service. But I think what you're doing in this presentation is really pretty cool. I think everybody here wants to hear about what's coming up next. So there are two parts really to your conversation today. The first is what is insurtech and what's going on, and secondly, there's this whole notion of embedded insurance, which is not necessarily something that people hear. So I want people to hear about what you're thinking about and doing in that space, because it's really, really cool and it's really new.
Yeah, happy to, Warren. And maybe it would be best if I can share my screen and walk you guys through what we're thinking here at Plug and Play in terms of the different trends that we're seeing in the market. So again, very happy to be with you folks today. Just to give you guys a sense of what the state of InsurTech is, I want to take us back first and what happened last year to get a sense of where we're going and what has happened this year so far, and then talk a little bit about generative AI and what we're seeing in the space. And then, as Ward mentioned, we're going to talk a little bit more about embedded insurance, which is a very exciting category within the InsurTech space. So let's kick things off with our 2023 overview. So as probably a lot of you guys have heard, we have seen a contraction in the funding market. The heydays of, I guess, venture capital are behind us. 2020 and 2021, despite the pandemic, were kind of crazy. And we're seeing this reversion back to the mean in terms of the overall funding going to the space. Now, we've seen that also the amount of deals in not just the amount of dollars, but also the amount of deals in the space is coming back to where it used to be. We're seeing a real contraction, and it's basically a tale of two cities. We're seeing on the news every day that there is more and more announcements around AI funding, but on the InsurTech side, we don't see as much activity as we used to. And I think that that's because most investors are now a little bit more concerned about what's happening on the AI front. That's why we're going to talk about generative AI and insurance in a little bit. But also the pure play InsurTech companies are getting funded these days really are the companies that are key to the success of the sector. It's arguably more difficult to get funded now. So that means that you really need to, as an entrepreneur, hone in your pitch and deliver something that the other investors feel like it's going to become one of the best bets in the space, a venture backable company from the get-go. One of the other things that we've noticed is over the course of the last few years, everything is trending, or $2 out of $3 in the space go to property and casualty. And it's trending more in that area where we tend to see more innovation than on the life and health side of things. And I think that that's been consistent. And what we've seen this year so far is that this trend is going to continue to 2024, where we're going to probably see more dollars going into the property and casualty space. Now, having set the tone of what we have seen for 2023, let's talk about what we're seeing this year. So in terms of funding activity, really interesting to see how things are starting to pick back up. Almost a 40% increase in the funding from Q1 to Q2, 189 deals that we've seen so far. So very, very exciting activity. Average deals are also increasing, so that's good. We're seeing more investors coming back into this segment of the market and deploying more dollars. And here is where we've seen a lot of dollars going into the AI-focused insurance companies or the InsurTechs. $1 out of $3 are only going to insurance companies that are doing things with AI. So as you can imagine, out of all the vast space within insurance, if you're an AI InsurTech company, you're more likely to get funded because you're either capitalizing on the momentum that we've seen with companies like OpenAI, or you have truly something that's actually interesting. And then last but not least, I think 40% of the dollars that we're seeing are going to risk-focused InsurTech companies, which is actually an interesting change of pace. But going back to what we mentioned around generative AI, we were really witnessing the rise of a new platform, a new shift in terms of what we've seen before. And we segment this in terms of how different platforms give way to new innovations. We saw at the beginning, or I want to say back in the day, more than 70 years ago, mainframes, then into the 80s and 90s with a personal computer revolution, then early days in the 90s, and then towards the 2000s, the internet, an open source revolution, everything that happened later on with the iPhone and the mobile, and then the movement to the cloud, and now what we're seeing with generative AI. It's truly really exciting. And when we think about what the impacts on the industry could be, our three predictions around AI are the following. So the first one is that AI is going to have a massive impact in the way that insurance companies are engaging with their customers. And why this is important is because we're seeing more and more insurance companies paying attention to a very specific demand, which is you're not getting enough love from your customers. In fact, when you survey how customers feel about the insurance industry, it gets little to no love. It's actually one of the second to last in terms of the net promoting score, right? And if we're just able to tinker a little bit with the way that insurance are communicating with their customers and provide a better service, perhaps claims with empathy, when you're able to address your customer when they need you the most, to provide a human-like experience when they're navigating, what just happened with the last hurricane, right? Or when you lose the breadwinner in the family. Those are the key moments when your customers need you. And if you're able to provide that path or that journey of being a little bit more empathetic about how you treat your customers, instead of just having them call a call center and wait online and all that stuff, then you're really going to see a differentiation in the way that customers are perceiving your services. And let's be honest, most of the products in the insurance industry are commoditized. So just making small changes here can have a huge impact in the way that your customers are preferring your products and services. Now, the second way that we believe that AI is going to impact insurance is around the way that customers are searching for insurance products. And probably a lot of you folks are currently using Perplexity. It's a tool that we love. But the reason why this matters so much, it's because most of the vast majority of the expensive pay-per-click words on Google Ads are insurance related. So 5 out of 10 have to do with insurance. And if you add then the other ones, such as credit, mortgage, lawyer, and so on, you can see how they're financial services related, or they have something to do with claims, for instance, right? And so in this arena where insurance companies are competing very hard to get customers' attention and their dollars, spending a little bit more time here and seeing the impact on AI is going to yield a massive amount of return. That's why we're seeing how Perplexity, for instance, that we talked about, is having a huge impact on the way that search is being conducted. Perplexity, for the folks that don't know, is basically an answer engine. Unlike Google, which is a search engine that doesn't provide you with a specific answer to something, it just shows you some sponsored links, and then eventually you'll have to click on the specific website that eventually will lead you to the answer. What Perplexity does is it flips this and it gives you an answer straight away with the sources of where it was actually able to pull in that data. This will have a huge impact on things like search engine optimization and the way that insurers are thinking about their online campaigns. And the third prediction about how we think AI is going to impact the insurance industry has to do with the way that insurance look, or the way that the insurance teams look like. We're very excited about the potential of tools like copilots and the enablement that this can bring to the industry, where it sometimes has a lot of difficulty being able to attract and retain technical talent. But what if you can infuse your technical teams with a copilot and make those engineers, for instance, 10x more proactive? This can have a huge reverberation across the value chain. But if we're thinking about, for instance, the difference between the property and casualty sector and the life and health sector, you can see here that US-based P&C, and for that matter, I guess all P&C carriers have to deal with the expense ratio. And unlike most life insurance companies, the expense ratio on the property and casualty side is almost double what it is there. So a very interesting area is to start thinking about what operational efficiencies can we infuse into these insurance companies to start bringing down that expense ratio, right? And that's where we believe that there's going to be a fundamental revolution in the way that insurance companies are actually composed of, because we believe that it's not that AI is going to take your job, but it's that people that are using AI are more likely to take advantage of these opportunities. And as we're seeing our corporate partners enhancing their teams with AI agents, we're truly seeing a revolution in terms of the amount of productivity that some of these companies are gaining. And so to wrap things up around AI and what we saw here in this space so far, I want to finish with a quote from Benedict Evans, which says, "First, we changed the tool to fit the work, and then we changed the work to fit the tool." And what we want to highlight about this image, and what we tend to focus our partners on, is this image here is what it was. It's a room full of what it was known as computers, people that were just cranking in numbers and crunching them all day long until they were replaced by a spreadsheet. And I think we take for granted how that sort of evolution came about. but I think we're going to likely see something similar with all the productivity gains that we're seeing on the insurance side through AI. All right, so let's talk about the specifics within generative AI and how it's going to impact, for instance, the value chain. So we're seeing a myriad of different companies and exciting new ones coming up that have to do with new products and services. We're probably going to see the rise of something like AI or I guess insurance for AI, the same way that we saw with the rise of all these cyber platforms. And so you have big companies like CrowdStrike, and then you have other companies like, let's say, Coalition or AdBay, for instance, coming up with cyber insurance. We're likely going to see more new products and services around AI in that very same sense. Then we're going to see a huge impact on distribution, sales, and marketing. We just talked about the automation and the productivity gains that some of these insurance companies can get. Imagine if you can actually increase the efficiency that your sales and marketing teams are having. Do you actually need that whole floor of salespeople, or maybe you want to double down on that and actually enable them to do more and gain more and capture more market share? Underwriting tools are getting a ton of attention these days, and how you're able to analyze a vast trove of data and spit out a result immediately, or how you can potentially query in real time all this data that's being ingested and in natural language be able to get an answer from all these documentation. Policy admin is also another space where we're seeing a lot of innovation. And then on the claims management side, we talked a little bit about how you could deliver claims with empathy. But what if you can actually, as the claims adjuster, be able to, in real time, query different sources of data, like all the reports, but also the videos, the different feed and information that you're collecting from other sensors, and see whether or not there's been fraud, or if you can actually deliver a claims payment much faster. That's also going to be a huge win. Some companies are now focused on the asset management side. We're seeing more and more of them coming out on the payments space. And then there's a myriad of other companies that are also interesting. But one of the areas where we want to focus more on is on the near-term challenges and opportunities. Really interesting companies are coming out to address the challenges are arising from the EU regulation. We're starting to see this sort of bifurcation between what's happening in Europe and what's happening in the US. Not too long ago, the California Governor Gavin Newsom just vetoed the AI bill for California. So this is very timely. I think we're going to see this sort of difference between what innovation is going to look like in the US in this space around regulation and compliance, which to date is arguably non-existent, to what is happening right now in Europe, right? We saw something similar happen with GDPR, but we don't think that the US is as keen as Europe at enacting regulation that might stifle innovation. And this is very important because we're probably going to see a few companies try to address some of the concerns from the European side, but you've probably seen on the news that companies like Meta, for instance, are no longer launching products at the same time in Europe because they don't want to deal with the hassle of the regulation over there. And so privacy and security becomes a big, big component of it. And everything that has to do with not only doing things with AI, but adopting and implementing AI for those companies themselves becomes also a very big issue. So data privacy, data leakages, and cybersecurity are top of mind and concern for all of our partners across the board. And then as we're thinking about what the next 3 to 5 years are going to look like, we often start wondering, are there any biases in the models? Are the answers that we're getting out of companies like OpenAI really open, or is it more, or if there's an opacity there that we can't actually overcome because of how close their models are? You become aware of if there are any biases, is there any discrimination happening? I think we all saw when Apple launched their credit card that there was a huge issue about the underwriting and how if you were female, you would actually get a worse offer from their team, and that was just a bias in the algorithm. So if it was exactly the same credit score and the same profile, but you were a man, you would get a better offer from Apple than you would get it from if you were a woman, right? And so that's the kind of problems that you're going to run into if you don't think about holistically how you can implement AI satisfactorily, you'll need to be able to explain the answers that these large language models and these algorithms are providing, right? And then there's a myriad of other problems that are going to come later down the road. We're probably going to see that a lot of these technology becomes also an opportunity for bad actors to manipulate and take advantage of. But I want to say that the future is very bright and that we're incredibly excited about what AI holds. We're at this verge of, or at this cusp of how generative AI is being adopted. And then we think that the next paradigm before we get to AGI is probably going to be multi-modality, meaning that you can pull in different modes of data, not just what you're seeing text to text, for instance, or text to image. What's mostly known OpenAI for, or ChatGPT, it's usually you're just typing something and getting a result in writing. We're probably going to see more exciting developments around the ability to start fusing and leveraging data from all the other different modes, such as sensors, temperature, and video, and all these other things to be able to engage with AI in a more real life setting, if you will.
What's going to drive the multimodality, though? Is that fundamentally a change in the quality of chips, the power of the chips? I mean, what's sitting underneath this? It doesn't happen by itself. What's underneath that?
No, it's a great question, Ward. I think there's a few different components that have to come into it. So right now, what we're seeing is this massive race for compute power. You've probably seen all these nuclear plants that are going to go back live, 3 Mile Island. We're going to see more and more developments in how people are building out their data centers. So the competition for compute power is how you're thinking about scaling some of these models. So can you build a well-rounded model with enough parameters and tokens so that you can actually deliver a comprehensive answer? I think the path to multimodality is going to be, there's going to be different models for different things that are going to be better at. And I don't think that there's going to be just competition for energy or chips, but we've seen with the skyrocketing price of NVIDIA and what Jensen Huang is saying about Blackwell, their new chips, we're thinking that the big players, the Metas of the world, not just Google and Microsoft and OpenAI, but other players are going to be able to deliver models that are a little bit more, that are smaller in nature, but better at doing specific tasks. And then on top of that layer of different models, you're going to have what we think are going to be routers that are going to be routing a specific query to the best model. So you're going to probably care about either efficiency, speed, or price, right? And it's going to be very expensive to get something small out of a very large model, like what we're thinking ChatGPT or GPT-4 or 5 are going to look like. And then eventually, as models continue to scale and it costs more and more money to train them, you're probably not going to use those massive models to answer something small. You probably want to go somewhere to a more efficient model. Or if you're asking something that these text-to-text models can't really answer, which, for instance, let's say something that has to do with IoT devices, you probably want to go to a more specific model that's able to do that and deliver the answer that you're looking for.
And we're going to see that happen with the new generation iPhones, because the AI is going to be sitting in the iPhones, which is also a data gatherer. So it has multi-purpose kind of perspective there. The question is, okay, how does that apply to something like insurance? Because I could see your clients coming in and saying, okay, now that I have the iPhone with that kind of capability, let me scale to personal insurance. Let me scale to embedded insurance. Let me scale to some of these other sorts of things. Or maybe let's underwrite a little bit differently. Use some mobile tools in terms of underwriting.
How much permission? I think what's interesting about the iPhone, to your point, Ward, is how much permission you're going to allow companies to have on your specific data. Apple has made it so that everything around your data is very well guarded, right? And so it created a massive amount of problems for companies like Facebook because they were not able to now tap into all the data on your phone, right? So let's say eventually you'll have your own passport, your own data passport on your phone, and then you're going to have permission to share some of this with the AI agents. And you can eventually will run some of these agents on your phone and have them deal with the claims process on your behalf, right? And so let's say you have a car collision your phone is automatically going to have or your car is going to be connected to your phone. Your phone is going to have all your personal information, and then they can actually call in 911 or file a claim immediately. And maybe, just maybe, we can get to that level of almost parametric or payment out of something that has to do with insurance, which is in this day and age unheard of.
Yeah, no, this has been a great conversation. Let's move further because you've got so many other great things to show us.
Sure. So what you mentioned, embedded insurance, and I think that this is actually a pretty interesting time to go into the segue. I am just to give the folks here an overview of what embedded and what we mean by embedded. We're going to talk about embedded finance, embedded insurance, and what happens in the future when everyone becomes an insurer. So let's start from the very beginning. So embedded finance. What we mean by this is the ability to integrate three things: the providers, the enablers, and the containers. And we mean by this is provide an insurance experience that is already embedded in something else. So let's say you have a provider. This means a service provider where the fintech solution gets to plug in their offering and improve the offering because they're providing now something unique, right? The most, or I'd say one of the biggest ways that people think about this is when you're buying a ticket to go on a trip, you can now buy travel insurance. That's usually the way to think about an embedded solution that's right there, right? It's thanks to companies like Plaid, for instance, the enablers, that you're able to communicate and exchange the data through things like APIs, right? And then you have all these containers or the aggregators that are distributing the services. When you get in an Uber, for instance, you can select what kind of, if you can actually be able to select and have some protection there as well. When you're buying something from Amazon, you can protect that shipment. You can protect something that you're buying with a warranty. So that's some of the ways that the providers, enablers, and containers are all working together.
And with respect to Uber and Amazon, they don't own the process, right? So they're not necessarily the insurer. It is passing through to another technologically embedded and enabled capability. That's different.
That's right.
Yeah.
They are the ones that control the user experience, but they're not the ones bearing the risk, and they're not the ones that basically have the insurance product.
Right.
Cool. So this is a massive opportunity for a number of different reasons. One, because a lot of people think that every company is going to become a fintech company, right? And so if you're now being able to embed finance products into it, whether you're doing buy now, pay later, or purchasing a warranty on a product that you're buying online, we think that a lot of companies are going to start rethinking about their offerings and being able to deliver fintech products. And so that's going to lead to more and more companies thinking about what their fintech strategy is going to look like. And in just a couple of years, this market is going to be massive, more than $230 billion. It's growing incredibly fast. And that's why a lot of venture capital firms like ours are doing bets in the space, because we think that the upside is still huge. What I'm seeing, or what we're showing here in terms of areas, is how embedded finance is projected to grow over the span of just a few years, right? And we're almost at the verge of 2025, where it's close to the end of 2024. And we're incredibly excited about the prospect of how this could continue to grow. In fact, insurance is one of the few areas that is not as mature as it could be, unlike, for instance, payments, right? And just the size of the industry alone gets us so excited about the future of embedded possibilities here. We talked about warranties, but that's just scratching the surface of what we could do eventually, right? And there are other areas that are adjacent to insurance. For instance, wealth management, and a lot of insurance companies are asset managers as well. Or in Europe, for instance, you sell insurance through banks. So there's a lot of areas where they're going to start complementing each other. Right. And so when we talk about embedded insurance, one interesting area to notice is we talked about the different funding trends. It's really picking up in terms of the activity, despite all that we saw. This graph sort of mirrors what we saw, generally speaking, around the funding deals back in 2020 and 2021. But we're seeing more and more deal activity on the embedded space. And that's why we're seeing the rise of all these other opportunities. In terms of the overall funding, again, embedded follows more or less the same path that we mentioned before within the broader insurance community. More than, I want to say, 50% of the dollars within the embedded space go to property and casualty insurance companies. And the vast majority happen to be on the B2B2B space. So companies are enabling other companies to provide financial services, products, or B2B to C. Companies are enabling other companies to provide financial products to consumers. Less so on the other spaces, and again, less so on the life and health side. I think there's a lot of room for other companies to do interesting things. We just had a chat not too long ago with a life insurance company. They're looking to embed products on pickleball courts. And I think that just gives you a sense of what interesting areas or new options for distribution some folks are coming up with, and where you can tap into consumers and customers that you hadn't reached out to before. Okay, so like I said before, the momentum is really picking up. I think one of the things that we track is the amount of partnerships and how they're evolving. I think they're really interesting. And you can see things from all the way from drone insurance, which I think it's kind of cool. Not as big as we thought it would be in this day and age, but I think still it's something that we're gonna continue to see growing. But more, what I want to highlight from this slide is more and more large companies are doing embedded deals. And where it gets interesting is you need the collaboration of so many people to make one of these work, which is kind of exciting. We're beyond those days where we thought we were going to just disrupt all of the large incumbents. You can see here companies like Chubb, companies like HDI, WeFox, Markel, and so many others that have become big, that they need to partner with smaller smaller startups to be able to deliver this sort of technologies, and that's what's exciting. When
they collaborate, do they collaborate and live in that environment for some period of time without necessarily looking to acquire that company, or is it sort of like a rent to buy? Somebody like Apollo or somebody like Chubb or any of the carriers are saying, "Oh, it's going to be too expensive for me to try to do this myself, right. So I'm going to partner with somebody else to see if there's actually a value proposition and an opportunity to actually drive market." And if that happens, then there's going to be a transaction. If it doesn't happen, we just terminate the contract or move on to another partner. Is that their thinking?
Yeah, I think that's a fair assessment. I think for the most part, eventually the goal of a lot of these startups is to be acquired. I think most of them want to IPO, but the truth is that that's not as often. The IPO market is fairly close these days, and not a lot of them are eventually going to be as successful as to go public. Eventually, a lot of these companies are going to end up being acquired by the folks that are actually using them, right? And then it becomes a very interesting game of, if I buy someone out that's working with my competition, will that competition continue to use my services or not? So if I'm working alongside Stripe and then I try to sell my service to someone else, Stripe is a good potential acquirer. But if Stripe acquires, let's say, a company from there, would Adyen, the competitor of Stripe, will want to continue to partner with one of these service providers? I don't know. And it becomes a very interesting dynamic of what is a company worth if those partnerships don't come or don't continue to expand, right? But yeah, to your point, Ward, this is super interesting because the buy versus build is a clear dilemma that all these large companies have. But what we're seeing is that more often than not, it's a sort of buy approach than a build approach. I mean, insurance companies, for the most part, are not that successful at launching new products on their own. Right.
That has been the case. I mean, the disruptors have come from the outside. If you look at a Coalition or some of these others, they're playing the game from a completely different perspective. The part that's interesting about what's happening in your space and what you're showing here is that eventually you're going to be creating ecosystems in which collaborators and competitors are the same, where it doesn't matter if you're a competitor or collaborator, because there's something in that value chain that both of you can benefit from. So I'm expecting to see more of that ecosystem methodology going forward, where a lot of these players are going to say to each other, "I don't want to play with you because you're a competitor," but in reality, they will.
Yeah, 100%. And the last topic on today's sort of presentation is what would happen if everyone becomes an insurer, right? We talked before about the shift that every company is going to become a fintech company. To your point, Warren, when you mentioned that the sort of distributors are not the insurance companies themselves, it's really interesting because what embedded technologies are doing is that we're sort of arming the rebels, the new companies that are coming up with new interesting ways to leverage data to now be able to provide a different product, to be able to provide a different experience. And the data that they're leveraging actually becomes a lot more interesting sometimes so that they can price some risk better. And they do it at a much faster pace. So one of the key issues when dealing with embedded insurance is, well, if I'm an insurance company and I'm basically doing everything except selling the product, and you are the one facing the customer, I need to take a step back now. I need to sit in the backseat and let you handle everything. I just need to make sure that the unit economics work for both parties, and that makes sense. But you've worked hard on your brand. You've established yourself as an incumbent, but now you're no longer in charge of selling the product or handling this thing. How does this work then, right? And it opens up a very interesting discussion, especially for large insurance companies as they're thinking about, well, I'm no longer going to be doing what I used to do, right? And we like to quote Annie Duke, the former poker player, or I guess poker expert and best-selling author of books like Quit and Thinking in Bets, when she says, when your identity is what you do, then what you do becomes really hard to abandon because that means quitting who you are. And I don't think a lot of financial institutions are ready to take that step back and let someone else drive the conversation with their customers, right? We saw how much money insurance companies spend on trying to compete for pay-per-clicks and ads on Google. Imagine just allowing someone else to now be the face of this whole thing, and you just have to then sit back and let someone else handle the relationship with the customer. And so I think a lot of companies are now starting to rethink what the coming years are going to look like, right? And some of the drivers that we believe are going to have a huge impact on this are, how do you define the playing field, right? Some products can definitely be sold through others, but we don't expect all products to be able to be sold digitally, right? And for you to be able to sell something digitally, you need to be at a certain infrastructure level that not a lot of insurance companies are ready to be there. We talked a lot about the enablers, the APIs. This requires a lot of change at the infrastructure, at the IT infrastructure layer. And upgrading that layer becomes also then a key priority for all these other companies. We talked about yielding the customer ownership, right? Taking a step back and letting someone else handle it. So what is that going to look like for your brand and what you represent as a company? But the ability to be able to unlock enhanced data from customers is actually pretty interesting now. And maybe there's a reward for taking a step back, which is you get to tap into data that you know that you didn't have before, right? We're seeing that in markets like California, where insurance companies are pulling out, or what just happened in South Florida with the hurricane, people are not selling homeowners insurance anymore. It's really tricky, right? And what if you can tap into specific data from, let's say, a mitigator or something that will enable you to have better risk selection, where you can actually price risk appropriately and then start winning market share because you're going to where no one wants to be now, right? And that is one of the opportunities that having enhanced data from customers gives you. And then we're thinking about the new structure design, how some of these partnerships are going to be created and where does the risk sit, whether it's on the insurance company or on the other companies that are going to be involved in this sort of areas. But yeah, as I said, it's a very interesting area, embedded insurance these days, but that's it on my end, Warren. So
I just, if you go back to that last slide though, the point I want to make to the rest of the group is, this isn't your father's insurance market anymore. This is not your father's or your grandfather's finance market anymore. The use of data, the technology sitting underneath it, the fact that we're now driving new ways to generate electricity to be able to support all of this means that there's going to be increasingly disruptive innovation in the marketplace. you as underwriters, you as insurance companies, you as risk managers are going to be dealing with this from, in some cases, an incumbency context, in some cases where you're starting to develop new ecosystems, or you're actually driving innovation yourself. So, Eugenio, you really sort of pointed to what's classically in the innovation literature, the innovator's dilemma. Do you innovate at the margins, or do you disruptively innovate? And the question is, if you're looking to disruptively innovate, how do you do that without hurting your organization to start with? So this has been an incredible capture of what's right on the leading edge right now in the marketplace. Not all of you are going to see it at the same time. It's not going to be a universal issue. It's not necessarily at this point a monolith, but there are key leading drivers that are sitting out there that you should be paying attention to. Jasmine, as you looked at this from your perspective, did you have a question for Eugenio in terms of what you're seeing?
Yeah, I mean, so I'm still kind of stuck on that embedded insurance slide where you had kind of the whole map of the different companies and how they had all partnered together. And I mean, I've seen embedded insurance in my day-to-day life, but I honestly had not been that familiar with, I guess, the words being paired together. And I personally work in D&O insurance, and I saw that there was an example of two companies partnering to do embedded insurance for directors and officers. And when you think about pet insurance or travel insurance or some of these that are for me, a little bit more easy to comprehend how embedded insurance applies, I just thought that was super interesting given kind of my own background, thinking about how you could embed the ability to purchase coverage for your directors and officers through embedded insurance. But no, it's really interesting to think about the future of the insurance industry. And I know a lot of change is coming and has already come in the last few years.
Yeah, I'm going to be really upset when I see an insurance policy issued on a pickleball court. What is the world coming to? Two questions coming in from the audience, and the audience will be asking additional questions via the chat that we'll get back to them later. But two that came up was, in terms of this space, what are the skills that you're seeing being developed by the people who are creating these new approaches? What skills are they bringing to the table, and are they different from what we've seen skill set wise in the past?
That's a really good question. I think in terms of skills, you want to think about this holistically with a point of view around what the future, and I think Jasmine alluded to this, what is it going to look like in just a few years, right? I think insurance, for the most part, it's always backwards looking. You are underwriting based on what happened before. And I think what's interesting about these opportunities are that we're able to pull in data that has not been used before. So you might get a result that's completely different. And sometimes it might not work. And I think that this is another important thing. Some of these partnerships don't end well because you have a thesis that you're going to prove out, but sometimes the unit economics don't really work.
Right. Yeah,
and that's
still valuable though. That's still valuable. You need to have winners and losers to understand where equilibrium could be, or where the next critical step would be. So you're saying, what kinds? Are you talking financial skills? Are you talking compliance skills? Are you talking tech skills?
Yeah,
what are the skills?
It's a little bit of everything. So I think that's very important. I don't think the people in Silicon Valley love to say move fast and break things. I think people forget that in finance, you cannot move fast and not expect if you break something, the regulator is not going to step in, right? You're going to have the insurance commissioner probably knocking on your door really, really quickly. So you need to have an incredibly solid base about what this looks like, but also be mindful of the fact that just because it's worked in the past in a certain way, and you're not using mortality tables to underwrite cyber, right? Like cyber is a lot more forward looking about what is the next threat going to look like, what are other potential areas where we might get breached. And so as soon as something like that happens, you need to patch it and move on to the next one, right? And so that's what I like to think it's going to look more like than backwards looking on the right.
Yeah, so it's a lot more iteration, a lot more learning going forward. Okay. The second question coming really reflects on your financial slides, and that is, in order to achieve this, it means a lot of capital is being devoted to experimentally new things or things that have a much better looking sort of outlook. Where's the capital coming from?
So a good chunk of the capital, the limited partners are deploying capital into the VCs are allocating in. Most of it are endowments, foundations, and
sovereign funds.
Sovereign funds, pension funds. And funny enough, a lot of insurance companies are also acting as limited partners. So I think that this is as much as people like to say that insurtech is not sexy or it's not forward thinking. I think that they underestimate how involved and really insurance is core to all these innovations. The capital that a lot of VCs are actually allocating into these technologies come from insurance companies, from their alternatives team.
Yeah.
And so I think that's an understated way to think about innovation. If an LP such as an insurance company can gain access through investing in funds like for instance, Plug and Play or other funds that are doing this sort of thing and spending time on insurtech, I think that's actually a pretty interesting way. And I think more and more insurance companies are coming around and thinking about how to invest and deploy capital into this space.
Well, Eugenio, we've come kind of to the end of our time. We could spend all afternoon talking about this. But on behalf of Jasmine, myself, and the CPCU Insurance Day group, everybody that's sitting in the audience, we really wanted to thank you for this very, very different, very, very eye-opening kind of discussion. Thank you very, very much. And with that, we'll return you back to your regularly scheduled exercises, and there'll be a short break, and then we'll go to the next final segment. Thank you again very much, everybody.